The international agency said that shale drillers fell by 30% in 2015 and will fall a further 22%. How true is this?
The 30% figure, I do agree with it, but I do dispute the second figure, which is that it's not clear cut how much of a decline we will see stateside, because you can't have a blanket assumption for all US shale plays. Some can make it work at $30, some can make it work at $40, some need at least $80, and they're dead in the water. These are the guys where we're seeing lots of bankruptcies, and they account for some of the decline in the rig counts. But I don't think the latter case is that clear cut.
What's the current break-even cost for drilling shale oil?
I would put it at about $35, $30 to $35, and that has, it's actually going down. I would say that a lot of shale players would be in trouble if oil fell below $25. But I would say between 30 to 35, they can make it work, and 40 to 60 range, you're not going to knock out some of the viable shale players.
So my next question was going to be, can shale operators make it work at these prices?
Oh, most definitely. Most definitely they can make it work. I would say 40 is the optimum level. And I would say where we are at the moment, many of them are more than comfortable. We see a rise in rigs because a lot of these independent upstarts stateside have started hedging forward on a 12-month basis using a base case scenario $50 oil price. Now, once they hedge, even if the oil price falls below $50, they'll still keep going until the hedge comes up for renewal. So most definitely they can make it work.
Now that prices have gone up to $50 a barrel, will shale drillers turn on the taps?
At $50, I would say a lot of shale players are quite comfortable, especially in the Eagle Ford in Texas, because that is very well connected infrastructurally. But I would say Marcellus players can also make it work. 50 is actually $10 more than what was the optimum price that I have my research suggests stateside. Like I said, a lot of these shale players can make it work at 40. So 50 is actually a bonus. It gives them the comfort to hedge further, improve their cash flows, and actually ramp up production where they can.
Can shale drilling make money at $50 a barrel, or will the USA supply continue to fall?
US shale players can definitely make money at $50 a barrel, but it's not across the board. You will continue to see bankruptcies in the US oil and gas sector. Again, some of these independent upstarts who sort of jumped into the market during the boom times and overpaid for their acreages, they'll keep getting knocked out of the market. It just won't be a Chapter 11 bankruptcy. They might just go under, or their acreages might be taken over by some other players at higher optimum prices. But I think 50 would keep a lot of these shale players going.
Do you think prices will build momentum and could reach $60 a barrel?
Over the next 3 to 6 months, yes, they will, because there might be some artificial intervention by the Russians or by the Saudis to ramp up the market. So over the next 3 to 6 months, we could see oil go up to 60. But the caveat there is that the moment we start talking about $60 oil prices, we've just discussed that shale will be comfortable at 50. At 60, they'll start ramping up production even further, and you'll see a further increment in the rig count. And suddenly again, that'll act as a corrective mechanism. We'll be back at 40 in no time.